Welcome to the Voice of MPE, the official podcast of Merchant Payments Ecosystem, Europe's largest merchant payments conference. This podcast brings you interviews with payment industry leaders and professionals from the entire payment world. For more information, head over to www.merchantpaymentsecosystem.com. In this episode, the host Daniel Kornitzer from Tillo will be talking to Alisa Applebaum from Gesti and Andero Tonissoo from LHV Bank about embedded finance and why it matters to consumers. Let's hear about payments, banking, insurance, and investments from their perspective.
Welcome to the MPE Berlin 2024 podcast on the use of embedded finance. I'm Daniel Kornitzer, board advisor at Tillo, and I guess fintech techie at heart. I'm here with Alisa Applebaum from Gesti and Andero Tonissoo from LHV Bank. Good morning.
Good morning.
Super. And embedded finance is a topic that's very, very close to my heart. And we're going to try and discuss why embedded finance matters for consumers, for businesses, for merchants, and for both financial and non-financial service providers. And we all know the usual use cases for embedded finance, things like payments, banking, investment, insurance, lending. There are also some novel use cases for embedded finance, but ultimately the concept is to weave financial services into the native user experience of non-financial services. And the main advantage from my vantage point is that it fosters innovation, resulting in better services, and it increases competition, which eventually delivers more value to consumers and businesses. So Alisa, from your perspective, how do SaaS platforms go about delivering embedded finance and payment?
Thank you for this question. So Gesti is a SaaS platform providing services travel tech. We're catering users in the short-term rentals. And from our perspective, we are all about the user experience and the benefit our user going to have from the different payments offering and financial services we can provide them. For us, it's really important to look into their pain points and their actual needs and to ensure we're improving their operational flows and we're saving them hours of work and we're streamlines all the aspects of the operational work with financial tools.
Thank you, Lisa. Customers first, always. And Andero, I guess from your perspective, what do SaaS platforms expect from embedded finance providers, including the bank?
I guess some sort of level of flexibility in terms of how to offer the banks or financial services products in a way that's convenient for the embedded finance brand or offering. It might be that the embedded finance product itself or the features are something that the bank or PSP might offer in principle. But we think the embedded finance product itself knows their customers better and the experience in that way is better, whether it's in UX or reporting or whatever. But
super. And maybe just to build on that, Andero, any thoughts on scenarios where those embedded finance partnerships work well as those that, I guess, go wrong? What are the common threads or some tips around that?
I guess where it works well is about when there's a common understanding between the participants and the common goal, I would say. So one good example is, for example, restaurant management software these days has gotten very weaved with payments, soft POS terminals, payment acceptance to just help deliver the restaurants a better experience to manage pretty much everything, payments in there. But where it might get wrong, I would say, is when the goals are not common and it's very much only growth driven and the common understanding is lost and actually risk doesn't get managed or the experience is not as good.
Excellent. Totally agree with that. Alisa, going back to you, why is that SaaS platforms want to deepen the field in terms of embedded finance and provide more and more financial services?
So first of all, as we mentioned, the main goal is the user experience and make sure we are helping our users and our merchants. And I think that we know our users the best, as Andrew mentioned before, and we have a lot of data about our users and we have a lot of information that can help us to support their businesses in the best way, in the best risk metrics and regulation metrics to streamline this process. And it's also about the monetization for the SaaS platform. It's additional growth opportunity, but I totally agree regarding the end goal. It shouldn't be only about the growth. It shouldn't be only about scale fast. It should be about the correct product, the correct guidance. And I would like to add to your answer from SaaS platform perspective that for us, when we partner with financial provider, with bank, with acquirer bank, it's really important also the guidelines, how to do it correctly.
Yeah, the hospitality sector is a good example where in more and more European countries and cities, you actually have to pay tax for short-time rental, and these SaaS platforms might have a better solution on how to report this and how to pay this tax. Like a general wide market share acquirer might not know how to do this, or it's maybe a bit adjacent for them to build something as well.
And ultimately, that would keep the providers compliant because if the taxes are properly, captured and paid. Actually, that brings us to the next topic, Andero, in terms of the regulatory landscape. Any thoughts on how that's evolving and I guess the impact it's having on embedded finance?
I guess it's getting a bit more challenging from a regulatory perspective because the regulators themselves, the recent few years have started looking at embedded finance a bit differently as well. And especially the growth factor, they have been looking at their regulated entities from an angle that is the growth actually sustainable in terms of KYC, AML processes? Do they have actually enough staff to do all the checks? And I think over the coming years, this will become more specific, the regulation, and the oversight might a bit adjust in that context. So we're eagerly awaiting on ESG3 and the outcome. I think this will change the industry quite a bit.
Interesting. I guess we're going to go back to Alisa in terms of how do SaaS platforms, envision their future strategy? What are the considerations that matter most?
Actually, it's a question we're dealing a lot with inside Guesty. And I think it's the correct balance between understand the liability we're taking from the financial services we want to build for our users and the tech solution that we want to build. And there is a very interesting balance that we're always trying to maintain to ensure that we're understand our liability and we're not going too deep into the dark holes of the regulations from one hand. But from the other hand, we have enough flexibility to build exactly the product that we need for our users. And from the vision that we have, eventually, I think the SaaS platforms, vertical SaaS platforms, are going to provide a lot of financial services to their users because we're a closed community that have a lot of information about our users. We can leverage this data. We can help with risk mitigation processes, and we can benefit our users with reducing the hassle of filling a lot of documentation, of a lot of paperwork, a lot of things that we can just streamline by the information we have.
Interesting. And can you give me an example of, you talk about liability that the platform would take. In what scenario would the platform actually be liable for anything?
So a great example is payments. Acceptance cards, because there are so many models today in the market to do the acceptance cards from the platform side. We can have zero liability with marketplace strategy and to refer users and merchants to providers. We can do half payfax models, non-regulated platform models where we are not taking the liability for the AML compliance, but we definitely taking the liability for the financial losses and for the credit risk. And we have the full payfax models where we need to go deep into the underwriting and AML obligations and compliance and to ensure we're underwrite the correct merchants. So I think it's really important when partner with providers from platform sides to understand exactly the liability and the operational flows that we will need to take on ourselves.
Okay. I mean, I spent many years at a global PSP, and we had different models where in some instances, the PSP would take the entire liability. So the platform had zero, but in other cases, if they wanted more of the rev share, they were taking 50% of the liability for chargebacks. It's part of the negotiation. But there is also a model where if you don't want to take any liability, obviously you don't get as much of the revenue growth versus the risk. There is a trade-off there. Andero, you wanted to comment on it?
Yeah, there are, as you mentioned, there are so many models. For example, the commercial agent model as well, which basically doesn't require the platform to be regulated at all, but at the same time gives a lot of flexibility. Is your PSP or bank okay with that model? That's a good question. But I think in terms of the regulated activities, there is like really no way to rely on the platform from a regulatory perspective. The only way the collaboration can really work is when that information that's required to be collected is passed on via tech and the requirements are aligned. But in terms of like processes that we would rely the platform to check documents, I don't know, IDs or registration documents or etc. We can't really rely, because when the regulation changes, platform is not regulated. They're not obliged to do any changes because of the regulation. But if you're regulated, then you're obliged to follow any changes that comes, and hence it relies still on the regulated entity and the liability.
I will be happy to comment on that, because it's usually in the legal agreements where is the liability fall to update the regulation requirements. And if a platform is liable for the updates and to ensure the platform is compliant to the regulatory changes, so the platform can perform changes to ensure the regulation is working and everything is streamlined. And this is a great example also why we need the partnership from the providers and to explain us exactly what we need to do, because a lot of the times it seems like a nice dance between the partners and the platforms to understand exactly what is the lines. And I think the strong partnerships coming from a good guidelines that we're receiving from the providers. Because if the provider is taking our hand and explaining us exactly what we need to do, what we need to avoid of, and how we can streamline the process from the tech that we have, it's just making everything much easier.
Totally.
And although the regulations might be the same for each regulated entity in that region, the interpretation of risk management for each provider might be different at the same time. So that explanation part, that working together part, always needs to be there.
Super. Very interesting. One question, I guess, for the two of you, so you can take turns on sharing your thoughts. How's technology innovation driving embedded finance? What do you see as the next couple of years in terms of the components of technology that are going to have the most impact on the industry around embedded finance?
It's around data, AI, and then finding the right customers for your financial products and actually optimizing, packaging different financial products, helping this data AI angle.
From our perspective, we believe in the vertical SaaS, because the vertical SaaS is taking more and more place in the financial services. We do see the growth of the need of the users in the financial services from their platform provider, because they have one place where they manage their business. It's only logical for them to remove the hassle to remember 55 different passwords to 55 different providers in financials aspects.
I agree with you in that, because often enough, those customers of those SaaS platforms actually might be either too small for a bank or a general PSP, or they might not be addressable in some way. But with the help with this collaboration, they are actually become addressable and viable customers.
Very interesting. And I couldn't agree more that the data and AI and the whole concept of mass customization, the ability to really deliver not spam, but relevant information offers that are actually desired by the consumer, that's the winning game. Super. Well, that brings us close to the end of our podcast. Thanks for tuning in to the MP podcast. And Alisa and Andero, it was a real pleasure.
Thank you.
Thank you.
Thanks for tuning in to the official MPE podcast. If you've enjoyed this episode, be sure to subscribe to the show and check other video interviews with other industry leaders on our YouTube channel. For more content, follow Merchant Payments Ecosystem on LinkedIn and Twitter. Don't miss out on our Positivity magazine, and remember to subscribe to the MPE newsletter at www.merchantpaymentsecosystem.com.